What's up, traders? So today I'm going to show you an option strategy that I utilize to bring in over $300,000. Now, if you're new to the channel, my name is Rashad. I am a full-time options trader, and I bring in multiple six figures a year from the stock market. And I use the funds that I make from the stock market in order to pay for my entire lifestyle. Now, before we get started, make sure you smash that like button and subscribe to the channel. That will help me out tremendously. And do remember that I am not a financial advisor, and this is not financial advice. All trading comes with risks. I'm just showing you how I've built wealth over time. All right, so unless you've been living under a rock, you know that the stock market has pretty much gone straight down over the last 3 weeks. And so this is ticker symbol SPY, which follows the S&P 500. But you can see on February 19th, we hit an all-time high of $613. And then over the last few weeks, it has gone down, and we've gotten as low as $558. Now, here's the thing about this drop. Our economy is actually doing great. Earnings season is over and most of our large companies are in a great position. This drop has happened because of the constant headlines about tariffs. And although I know that it sucks seeing your account go down so quickly, I'm telling you that this is an opportunity. There are two types of people when it comes to markets like these. There's the one that sits by and does nothing, and then there's the other that gets aggressive and buys and trades at these prices, and they are typically always the ones that benefit in the long term. All right, so this was a little more than a 5% pullback, which 5% pullbacks happen on average about 3 times per year. But that's the average, and we don't know when this will happen again. But then if we look at the NASDAQ 100 via ticker symbol QQQ, it dropped more than 10%, which will put it into correction territory. Now that happens on average 1 time per year. And like I said, because this pullback is more based off of tariff headlines and not an actual downfall in our economy, I think we have an amazing opportunity ahead of us. But don't just listen to me. Here's the opinion of billionaire investor Ron Barron.
Joining us right now is longtime Tesla bull Ron Barron. He is Barron Capital's chairman and CEO. He's been, again, a longtime investor, not just in Tesla, but in many other Elon Musk companies. And Ron, thanks for coming in today.
Thanks for inviting me.
Let me ask you very quickly right now how you're feeling about the overall markets. You're a value investor. When stocks prices come down, sometimes value investors get pretty excited. How do you feel about things?
Well, it makes people very unsettled right now, all the things that are happening so quickly. I think they're intentional. I think that the government, you got Musk, incredibly consequential person, advising the president. And I think that all the things they say that make the market go up or down, you shouldn't think that those are by miscommunication or error. They're all intentional.
Not intentional to drive the stock market down, to get to a different place for the economy.
Well, everything.
Yeah.
I think it might even be intentional to try to slow down the economy, get rid of inflation. First-term president, the first thing you do is try to do things that are going to be unattractive to your constituents. If you're running for election, but you do it now, get it out of the way, and then a year and a half from now, then things will look better. A year from now, things will look better. But stock prices, I've been saying for a little while now, I can't believe how cheap they are. This are the things that we're looking at.
So there you have the opinion of a billionaire who's been in the stock market for quite some time. But now let me show you just one of the ways that I plan on taking advantage of this stock market pullback. And one of the strategies that I'll use is selling puts. Now, if you're new to options, I'll explain everything in a second. However, if you are experienced at options, make sure you stay to the end because I'll show you a better way to go about selling puts. Now, when you sell puts, the objective is to 1, generate income and or buy a stock at a cheaper price at a later date than what it's selling for today. Okay, so objective number 1, generate income. And number 2, buy a stock at a cheaper price. And you really could think of selling puts kind of like selling insurance. But instead of for a car or a house, it's for stocks. And this is how this will work. Let's say we have ABC stock that is currently trading for $100. What we could do is come in and sell a put at, let's say, $90. And for selling that put, we receive $200 up front. And we'll set the contract for about 30 days. Now from here, 2 things can happen. 1, ABC stock stays above that $90 threshold and we just keep our $200 and go about our day. Just like when you pay for your car insurance every month, they keep the premium that you pay them every month, whether you get into a car accident or you don't. So that is option number 1. And then option number 2 is if ABC stock were to drop below our $90 threshold by the end of our contract, then we are agreeing to buy 100 shares of ABC stock at the $90 strike that we selected. But in this case, you still get to keep that $200 premium that you were paid. Okay, so either way it goes, you get paid to wait around. Either 1, the stock doesn't crash and we just go about our day, or 2, the stock does crash and we still keep the money, but now we need to buy the shares of the company as well. And that's how selling puts works, but it becomes even more beneficial during times like this when the market has already pulled back a lot to begin with. Now, the next question is what stocks to use this strategy on. Now, in times like this, it can be difficult to determine how quickly an individual stock will bounce back. However, what we do know is that the entire market will always trend in an upward direction over long periods of time. So during times like this, I like to trade the S&P 500 or the NASDAQ 100. Now, here's the thing. If we look at the S&P 500, so we are back at ticker symbol SPY, we can see that it is currently priced at $558, which is fine. But the problem with selling puts is you are agreeing to buy 100 shares of the company if the stock price were to drop down per contract that you have. And so in this case, we would have to buy $55,800 worth of SPY if it went below our strike price. And not everybody has the ability to do that. So I like to use leveraged ETFs. A leveraged ETF is simply an ETF that follows a specific stock or sector. And typically it looks to move 2 to 3 times that stock or sector per day. And so if a leveraged ETF were to follow the S&P 500 and the S&P 500 went up 1% for the day, a leveraged ETF would likely look to move up 2 or 3% for the day. And the same works in reverse. If that leveraged ETF were to move down 1% for the day, then the leveraged ETF will look to move down 2 or 3% for the day. And there's 2 reasons why I like trading leveraged ETFs. One, because they move more. That means they're more volatile, and the more volatile a stock is, the more premium that we get paid as option sellers, because we are effectively taking on more risk. And then the second reason I like trading them is they're typically at a lower stock price than whatever stock or sector that they follow. And one of my favorite leveraged ETFs that follow the S&P 500 is ticker symbol UPRO. So here we are looking at UPRO. We can see that is a 3x leveraged ETF to the S&P 500. And if you recall, ticker symbol SPY, which follows the S&P 500, was currently priced at $558. And we can see that UPRO is currently priced at $73. So it's much easier to sell puts on this than it would be to do SPY. Now let's head over to Thinkorswim and look at a few data points that I would look at prior to placing any trade. But real quick, if you know anybody that you think can learn from me, please tell them about the Trade to Freedom community. Not only will they get my exact trades as soon as I enter them, in which I have 0 DTE trades for those looking to do day trades, all the way up to monthly income strategies for those who are busy. So they'll get my exact trades. They'll get my entire Trade to Freedom course, which teaches you my entire framework on trading options. And then they'll be within a community of other traders who all have the exact same goals as them. So if you know anybody, send them the link. The link is in the description below. But let's get back to the video. All right, so I now have UPRO pulled up on the options chain in Thinkorswim. Now the first thing we need to do is select our expiration date. And when selecting expiration dates, I typically always go within 45 days when I am selling contracts. And the reason for that is the time value decays the fastest within the last 45 days. And when we're selling contracts, we want to receive as much as possible and we want to pay back as least as possible because we just keep the difference. And because a good chunk of an options contract has time value priced in, we want to select the time period where the time value decays the fastest. So I'm going to come over here to the options chain. And remember, I said we want to stay within 45 days. So I think I'm going to go to this date that is 36 days out from now. So I'll go ahead and select it. Now on any options chain, the put side will always be on the right side and the call side is always on the left. But if we look at the far right, we can see that this column says delta. And by definition, the delta is how much an options premium will move based on a $1 move in the underlying stock's price. However, most successful investors that I know use the delta as a probability of an event occurring. Okay, so if we come down here to the $65 strike, we can see that it has a delta of 0.24. So I look at that and it says to me that there's about a 24% chance that UPRO's stock price will drop down to $65 by this expiration date. So in other words, I would have about a 76% probability of profit. Now, when my account was much smaller, I used to go up to a deltas of 0.30. But now that I have a larger account, I typically go with a delta of 0.20 or lower. So it looks like this strike of $60 would be a delta of about 0.16. All right, so that is the delta. Now, the second thing I want to look at is what is the expected move? Now, the expected move is just the move that the options market has priced in currently, based on information that is readily available right now. And if we come up here, you can see that this number says plus or minus $13.49. So that is the expected move for UPRO for 36 days out from now. So this could be a upward move of $13 or a downward move of $13. But as of right now, that is the maximum move that the options market has priced in. Now, with UPRO currently trading at $73, that would put the expected move on the downside to right around $60. All right, so the $60 strike is sounding really good to me. So if we look at this bid and ask spread, we can see that the bid is $1.80 and the ask is $1.95. Now, if you're new to the options, this price that you see is per share. See, every contract is worth 100 shares. So if we were to sell a contract, we would receive 100 times the amount that you see. So typically you receive something in between these amounts. So let's say it's $1.85. Well, if we were to sell a put right now, we would receive $185 up front right here, right now. And that honestly sounds good to me. So I'll go ahead and click. And now we have our ticket pulled up. So you just need to come over here, make sure that it says sell. And then here you can select however many contracts that you like. For the purposes of this video, I'll just keep it at 1 contract. But you can see it automatically pulls up the expiration date and the strike price that you selected. And I would probably try to get a higher premium just to start with, and you can always lower it later. So let's do $1.90. Once that looks good to you, hit review and go ahead and place the trade. So now I'm at the profit and loss chart so we can see how much money we are looking to either make or lose from this trade. Now, if you keep an eye on that number at the top left, you can see that UPR stock price is currently right here where this red line is. And if the stock price goes up, we just make that $190 that we received. If the stock price stays the same, then we just make that $190 that we received. If the stock price were to go down a little bit, we still make the $190 we receive. Now, it's not until the stock price goes below our strike price, which was at $60, that the amount that we make becomes less and less. And then eventually it becomes a losing trade, quote unquote. However, if you're only doing this on a stock that you would like to own at a cheaper price, then it's really like a win-win. And the fact that we are doing this on a stock that follows the entire market makes me rest easy at night because we all know that the stock market will go up over long periods of time. Okay, so if UPRO currently at $73 stays above our $60 strike, we just keep our money and go about our day. However, if it drops below the $60 within the next 36 days, then we still keep the money we were paid. We just now need to buy 100 shares of UPRO at $60. But if you know anybody that you think could benefit from learning from me, please tell them about the Trade to Freedom community. Not only will they get my exact trades when I enter them, but they'll also get my entire Trade to Freedom course, which teaches you my exact strategies for options trading. And thirdly, they'll be within a community of other traders that all have the exact same goals as them. So if you know anybody, the link is in the description below. Please send it out to them so we can help make their 2025 the best yet. But make sure you like this video, subscribe to the channel because I have some amazing videos coming up soon. But until then, I'll see you guys at the next one. Peace!